Okay, so hello everyone. What a very profitable trading day because every index, every data seem to show a really bullish signals. So okay, so let's take a look at some major indicator. First of all is the US 500, the S&P 500 show the upside of around 0.08% compared to previous close. While the US 100 is down, just down a little bit, about 0.02%. Actually, when the bell ring closed the trading day, it closed below quite 0.01% only, and the Dow Jones 30 closed higher 0.09%, and the data also even more positive for penny stock when Russell 2000 and Russell 3000 also very positive bullish signals when it's up like 0.81% today, while the Russell 2000 is up 0.05%, and one of the index also overlooking the whole industry, the whole US economy in all sector also show the positive for 0.47%. This actually very positive kind of outlook and positive you know feelings from investor coming from the data release. First of all, yesterday there are a lot of economic data release. First of all, is the U.S. initial jobless claims, and it seems like it is down to only 364,000 from 415,000. Uh, Actually, this is forecasted to be around 390,000, but it's actually down to only 364,000. And yeah, so this new filing reached the lowest level since March 2020. Prior to Thursday report, which is today, initial unemployment claim has stagnated in recent weeks, holding stubbornly above the 400,000 level, even as employers across the economy struggle to fill open positions. However, the overall trend has improved markedly over a longer time horizon, with new claims coming in at about half their total from the beginning of 2021. New claims were coming in at just over 200,000 per week on average throughout 2019. So this really showed that the U.S. economy has picked up the pace and on the race to recover on a very fast race, if to be frankly, and also okay, yesterday also the construction spending data. Oh no, it's just down a little bit, which is not too much a problem. However, um like decline 0.3% from the previous month to a seasonally adjusted annual rate of 1.545 trillion dollars in May 2020. So spending on private construction dropped. This also shows some kind of not really positive news regarding to construction. However, we can still regard this as just one of the number for us to reference the bigger picture of the U.S. economy. So there are much, important data to be released tomorrow. I'm gonna talk about that later. And lastly is the PMI. So the PMI also stood at 62.1 in June 2021, slightly down from a preliminary estimate of 62.6 and unchanged from the previous month all high. So this marked improvement in operating condition, which was joined strongest since data collection began in May 2017, um, following the further relaxation of COVID-19 restriction. New order growth was the second fastest on record, while output expanded at a softer but solid pace due to an ongoing and severe supply chain disruption and report of labor shortages. Meanwhile, manufacturing firms indicated a solid rise in employment during June, but the rate of job creation was the lowest for 6 months. On the price front, input costs rose at the fastest rate since data collections for the series began in May 2007. Finally, good producer registered the strongest degree of optimism regarding the outlook for output for 7 months. So in general, it is quite I would say it's quite it's although it's good, it's not as a fast pace as the economist has predicted for the product manufacturing data, largely due to the supply chain disruption, as you already know. So it's not a major surprise. The questions is that whether or not the inflation will be too much, will be too hyper, that it gonna destroy the economy and affect it in the long term. The answer is still a major question because first of all, yesterday also like the federal effective federal fund rate has been released and it's just up a little bit since May, which is 2.0.1 from 0.8. So it's not a major increase. However, like actually this is like make a reasonable sense because um okay, so yesterday let wait, can you replace it? Okay. So okay, so the Wall Street think that the pricing pressure from transitory as the Federal Reserve predict, as we already know, bond yield will move higher over time, and the massive fiscal spending and monetary stimulus of the last year and a half to combat the ill effect of the coronavirus is likely to put some upward pressure on the bond yield down the line. This process should be expedited if the central bank were to reduce its bond buying program later this year. Also, the energy and financial group, which were two best performing sectors in the first half of this year, should be area where investors continue to look. However, yesterday, I remember the comment from Fed Chairman Jerome Powell, who reiterated that the central bank believes that the inflationary pressure will prove transitory once the COVID-19 supply chain disruption are resolved. The investment community appetite for risk return. The mega cap technology names have done well in recent weeks, and also some of the technology companies also like recover fully. So only only when the question about supply chain disruption is resolved, then the inflationary pressure won't be, too much concern. But as of for now, the Fed gonna still try to keep the interest rate as low as possible, so it won't affect the economy much and help to foster recovery. And the government bond yesterday also short term show like really I would say not much rising for the short term rate, but a little bit rise for the longer term 10-year and 30-year bond yield, which also point to inflation. However, as I already say about the federal chairman comment, it's not much of a concern only when the supply chain disruption are resolved. So this really depends on the coronavirus like recovery from other country, other main trade partner of the US. So yes, that's for it. So let's look more into the this sub-format. So this show how different market trend of different industries. So let's see. So yesterday also the technology is also the grow the highest, while the stable companies record the lowest. Um, Discretionary also high, but like stable company is quite low to be honest. And okay, so as the really like inflation pressure has been ensured by the Fed, and we see like they don't increase rate much, so we can consider more inflation rate. Actually, should not ignore, but of course we need to balance that because we don't know what's gonna happen. More economic data gonna release tomorrow. Will help us to know more if we should lean more to growth stock or value stock. Okay, so as I already said, the energy and financial groups perform really good, so we can look at that. And the earning power of banks would probably benefit from higher rate, while the oil companies are best positions to take advantage of higher prices. The importance of their product to the everyday life of people make it an area where consumer can find a seamless alternative. On-point travel is predicted to return to pre-pandemic level, which will increase demand for gasoline and will drive crude oil prices higher. Okay, so let's look a little bit about the commodity data. So we expect to see the increase in some commodity. Uh, okay, let's look at the SQY first. So the XY for yesterday also have the increase here. So it's quite positive, isn't it? And also because of inflation, there's so many factor why the dollar increase because like economic data really positive. Also like some adjustment from the I think the China central bank has sell some the dollar US to the market also. While the commodity over here also like the gold also rise a little bit. Silver, gold, precious metals also rising. Oil also gonna rise because of the travel restriction got lifted almost everywhere in the US. Okay. So in general, um, like I think that the recent rotation back into the high growth sector may present an opportunity in some of the cyclical years. Yeah. So cyclical years and areas which have pulled back from recent high from last week. Investor may want to keep like an eye on the stock like in the airline, travel and leisure and hospitality industry that have not fully recovered from the pre-pandemic level. The industry, along with some recreations and retail companies, may benefit from a full reopening of the US economy and consumers sitting on a saving from the lack of activities and the lower expense incurred during the pandemic. On Tuesday, the Conference Board reported that the U.S. consumer confidence jumped to its highest level since February 2020. So this is really positive that all the stock regarding like airline, hospitality industry gonna recover. So please keep a close eye on that. So although the month of July has not been good to investor long in equity the dog day of summer for the US stock market lie ahead for investors. So since market valuation looks stretched these days and inflation might represent a near-term threat for equity, a corrections down the road. Here, let's look at the bigger picture. Okay, so here, uh, so we're gonna expect to see some kind of correction during July. During July, cannot be ruled out in July. So although the month next week, so those of a conservative bid would do well to give the stock like rank higher for safety and a closer look of the stock. So in general, okay, so next week I'm gonna do some things called like the conservative portfolio and risk taking portfolio for you guys who want to reference. And these portfolio gonna have like a clear beta alpha number, so you guys can look at that and see whether or not your risk taking is, I also gonna, analyze all of the worst case scenarios. And please stay tuned for next week because I'm gonna do some kind of like currency pair evaluation, their performance, expected performance in the short term, long term, what kind of price level you should expect, and look forward to, what kind of data you should look forward to, and jump in, and how you should place your resistance and support level to actually to join with the bankers in the um in the forex market. So let's see, last but not least, tomorrow, which is July 2nd, we're gonna see some kind of releases on the employment situation, which focus more on the wages. So with this data, we can know more about whether the inflation is, serious or not. Okay, so tomorrow we see the employment situation, some international trade. This can highlight some kind about the supply chain disruption and also the factory order. Actually, this number is not that important for the US economy. However, we can still use this as a reference for the component in the GDP of the US. So, okay, so I want to update you some like kind of data about the financial industry and also other industry. So, mortgage origination jumped 64% in 2020 as low rate drive refinancing boom as mortgage rate fell below 3%. So this fall is probably because of the, this definitely because of the decrease in the decrease in the 10 years, like the low 10-year bond interest rate that keep it low like this. And okay, so also most big European banks expected to hold on to loan provisions in quarter two. So this usually highlight that the risk level and the capital reserve in European bank are highlighted because of too many risks incurred. So this is no surprise at the European market. Vaccine rollout is not as fast as the US. Also, some technology news update. Microsoft Windows 11 target hybrid work, learning for post-pandemic work. Work gonna be released in the coming years. And retailer continue online grocery investment despite slowing sales. So this is, because we are in 2021 and in phase of the pandemic, only by e-commerce can help solve the problem if any kind of variant, explodes in the future. Last but not least is the metal and mining. Okay, so there are some sustainability concern regarding the electric SUV. So this is more like electric vehicle industry. So that's it. That's for it. I hope that I can update you with the, most up to date news on the stock market, the financial market in general. Before the market, stock market open tomorrow, I gonna like do another video to prepare yourself for the um the upcoming sections, trading section. But I'm thinking about whether or not I should do something like the currency pairs predictions. Cause okay, so today I'm gonna like release another videos about like the currency pair predictions, and next week I'm gonna like some more like analyze some more about the portfolio management, the currency pairs, and gonna do one video before its trading sections to prepare yourself for the upcoming trading section. So from next week, I'm gonna release about like 2 to 3 videos every day. As I already say, one is about currency pair or else the portfolio management or the stock analysis. So let's stay tuned for it and meet you guys like before the trading section today.